Okay, so in 1 minute's time, we're gonna start and we'll wait for others to come in. Oh yes, you can see my screen. Yeah, beautiful. So now, before I will start, I want people to send me type a message. What are the problems you're having in the Forex market? In your Forex journey, what's your problem? Both Forex, crypto, though what we're fixing this day, just Forex. We're supposed to have other, sorry, let me chip this in. We're supposed to have other people, tutors, to come teach us about US 30, some prompt firm, but I got a message that he's running late. You know, this is 4:30 p.m. here in America. In another place, somewhere in another place in America, it's actually 4:30. So they'll be busy. And before they come before we can have a class on that, you guys will be asleep by then. So I wouldn't want to put anybody awake for this. So maybe we're going to reschedule that. We do this every Sunday. So if you're going to be part of it, every Sunday, you can join us, and we do this 30 minutes before markets open. We look at the pairs that want to take, and we kick it up from there. So just for those who want to learn, if you're not ready, no problem. Okay. So that is it, by the way. So I was saying something. Type and tell me what are the issues you're having, why you've not progressed in your Forex journey. Type it on the screen, please. Let me see what the problem is. Is it personal? Is it risk management? Is it greed? Is it, you can just type it in 2 or 3 lines or 1 word. Tell me why or what is happening that you've not progressed in your journey as a Forex trader. I'm waiting. Did you hear my question, please? And the reason why I did this Zoom was somebody's question on the Telegram channel. The person asked, how did I know that price was going to drop to lack of consistency? Okay, lack of consistency, you need, I'll take it one after the other. Lack of consistency, what you need is a trade journal. If you have a percentage of what you can do every day, as soon as you've achieved it, you just leave it. If you want to do it weekly, fine. I know this Forex market is very, very tempting, because by the time you make, like last week, I made 65% of my trading capital last week. So imagine I said, oh, I want to be greedy. I said, let me go back in the market and see if I can make it 100%. I might as well lose everything. So you need to be consistent. If you've made a percentage of what, because 100 pips, I do 100 pips loss, 100 pips take profit. Majorly 3 entries, at max 4 entries, if you have been following my trades. So if I lose it for 3 entries, I've lost 300%. Sorry, I've lost 300 pips for that day. But if we win it, I've won 100 pips that day. So I've calculated it that, to give or take, in a day, I'm supposed to lose nothing less than 2%. 2%, 2 to 3% of my capital. You don't have to go beyond that. Then if you win, I'm winning more. Wrong entry. Wrong entry is you need to learn more. Wrong entry is you need to learn, you need to study more for you to know when to enter and when to exit. Trading is what? Buying at a support and selling at a resistance. The only problem we have is when you try to buy at a resistance zone and try to sell at a support zone. That's when you have a wrong entry and you'll be on a loss for a very long time. And now there are different types of resistance and support zones. Some are stronger, some are not strong, some are weak. So it depends on where you want to your entry. If you go on the strong resistance zone, price can respect it and sell. But if you're on the weak resistance zone, price can easily break it and keep going up. So those are the things that you need to know, and these are what education helps you. Not living on time is still the same thing as having a trading journal. You need to have a target every time, every day. You need to have a target. Do I want to do 50 pips? Do I want to do 100 pips? Like every time I say, as soon as price has done 30 to 50 pips away from your entry, the most important thing in your trading life is your capital. Secure your capital. Always secure your capital. That's the most important thing in your trading journey. If you secure your capital, it will help you not to be losing your money. So when it has done 30 to 50 pips, secure it. Even if price retraces back to hit you on break even, you've lost nothing. But if you're lucky enough, price goes and hit our take profit one, which is 100 pips, you move your stop loss towards entry. Now, for those who just came in, the question was, what are the problems you're facing in your trading journey? Now, someone said risk management. Risk management, you need to understand that, okay, if I'm having $5,000 in my trading account, what do I want to do? $5,000 means every trade I need to spend per trade in a day, I need to lose just only 2% of my $5,000. So 2% of $5,000 should be about 500, if I'm not mistaken. If I'm not, my maths is not mathsing. It shouldn't go above that. So if you know that, oh, I'll need to lose 500, what is your lot size going to look like? So you don't have to use a massive lot size that will wipe away your account. So even if I call a trade and I give you 4 entry, with your $5,000, the maximum you can use is 0.02. You enter it 4 times. Oh, $100. $100, you're supposed to just enter only once. Even if I call trades that have 4 and 3 entries, with $100, you should enter just once. You hit your TP1, you're done. That's $10. You're done for that day. Even if the market is going up, 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 just forget about it. Because you don't know what could happen. The market go up. Like in some cases, we've done two TPs and market go back to our entries, and what does it do? It knocks off our entry back and keep going down. So the most important thing in your trading journey is what? Your capital. Learn to secure your capital at most. Because there's a saying that says, no trade, no loss. But as soon as you click a buy or you click on the sell, either 2 things that's going to happen. You're either going to sell, you're going to win that day, or you're going to lose that day. So don't be in a hurry to do what? Make quick money. Forex is not a rich scheme, what do they call it? Rich scheme stuff. Is a gradual process. So imagine that you have $100 and every day your target is $10. $10 is the whole thing. That's 10% of is too much. But let's say 10% every day or in a week. In a day, 10 times 5, that's $50. In a month, 50 times 4, that is what? 50 times 4 should be 200. So if you're doing that, you've already made 200. In a month, you've made $200 profit. So you don't need to rush. If you're consistent, you've made $200 profit. If we're consistent, just going for only TP1. If you notice was it last week or last 2 weeks, it was only twice that our our stop loss was hit. But every other one got to at least TP2 before it went back down to hit us on break even. The last one we did, our TP was missed by just how many pips? I think it was about 9 pips. Because the last TP was 2332. That's before the one I called. But price got to 2331 and some people before it came down. So imagine that you've gotten enough money for that day. You still want to make more. No. Always secure your profit 30 to 50 pips. Now, the reason why I did this Zoom meeting was a question somebody asked. Let me see if I still have that question. The person asked, how did I know that price was going to reverse from 2358? I think I remember. Yeah, that was the last trade call that got to our 3 TP. Didn't get to the last one, which was 2332. Yeah, if I'm not mistaken. Sorry, 2432. That was our last TP. But price didn't get there. Now let me show you. This is a plain chart. We're going to start. Sorry. So, please, as soon as you come in, can we unmute our mic? So we'll not. Okay, so if you want to ask questions, please raise your hand or type on the chat box. Okay, I'm going to admit the questions. So now we're going to go into our trading proper because the market is going to open. So we might see if we're going to go in or out. Now, how do I take my trade? I don't normally use monthly. What I just do on monthly time frame and weekly time frame is just visuals. What my eyes could see. What is the market doing? The market is on a bullish run. So there's nothing I'm analyzing on this. I've just seen that it's on a bullish ride all the way from here, all to the way top. Market is going up. That's what I want to see. Those who use the weekly and monthly are people who have million, like $500,000, 1 million, and all that in their accounts. So those are position traders. Some people have been buying, but I've been buying gold since this drop here, and they've not left since 1,000 when the gold was $1,000. They've been buying it up to it, and they're still gonna buy it because gold is going as high as 2,500. So they're keeping their trade. So I'm not in that. I've not gotten to that level yet. So I don't lose this one to trade because just one move from this can wipe off your whole account. So what am I looking at? I'm just looking at it to tell me price action and tell me the direction of the market. So price action is still telling me everything says that market is still what? On a bullish run. I go to the weekly to see, does it go with the same thing? Weekly tells me, yes, market is still what? On a bullish run. So if I zoom out my this thing, I see that, yes, market is still respecting the bull run. So what I do basically is on my daily time frame. So I'm going to clear this chart and we'll start proper. So I go to my daily time frame. There's one thing you should know about the markets, the Forex market. The Forex market use what they know as support, resistance, and what? Algorithm. You know, when they said the market makers go for your stop loss, the market makers go for your stop losses and they want to wipe your accounts. These people don't know where you put your stop loss. They assume. And most times the assumption is right because there's so many education, there's so many teaching on YouTube. They see this thing. They tell us where you're going to put your stop loss is below your support if you're buying the last low, if you're buying the last high, if you're selling. So there's a tendency that have you noticed that when you're trading and you put your stop loss maybe somewhere above the last high here, market to just come and wick it out and come back straight to your TP. If you know it has happened to you so many times, can you type 2 on the chat box? You see that you've done all your analysis. Market is supposed to sell. You put your stop loss on the last high, and the next thing the market just goes boom and hit you up. Maybe hit you exactly at your stop loss and start coming back down straight to your TP, because they know that this is what people do. They already know that this is what people do, so they are using that to buy. Somebody wrote it to be a very long one. Do you understand? Yeah. So they know that that's what people do. Jide, this thing must have touched you personally because this is too long. So that's what happens. It goes all the way and it just goes straight to your TP and you'll be so angry that what is actually happening? Are these people, is my village people, or are people attacking me? Are they looking at this? No. This is assumption that they already know that people do, and they go up because when you're losing money, somebody's making money. You are putting more liquidity for the brokers. You are doing so many things because if you're losing money, brokers are making money because you're going to do what? Add more. When you lose, you blow your account. You will still fund more, right? You will fund more of it. Someone said they've been following me since 2020. Okay, that's good. So now what we're going to do now, I want to show you simple thing that I trade on the markets. Very simple. All I use is measurements. Maybe in my next class, I'm going to show you how I measure on my daily. There are 2 types of measurements I do. I'm going to teach you one today. So the next Sunday, I'm going to teach another one on how I measure my trades that makes me understand where the market is going. Sometimes if you follow me on Telegram, I'll say as soon as price closes, if two daily candle, one daily candle close above XYZ price, I'm expecting a bullish move. If it closes below, I'm expecting a bearish move. If you've heard me type that so many times on my Telegram, it's because I've measured the move and I see that this how market is going to react. The only reason why I said it, that was my fault. The sell that I called, which went for TP1 and TP2, and it didn't go as low as and I told you guys to close all trade and let's look for a buy. My analysis was perfect because I saw price going as low as 2,400. But because I had to listen to my mentor, one of my mentors that I respect very well in the Forex market, he saw a buy and I was like second guessing my own analysis. I was like, are you sure this thing is going to buy or it's going to sell? Well, let me just leave it. Because I saw it going even as low as 2,355. But I was like, but my mentor said it's going to turn. Then I called the buy at 2,345. And that was that was our first loss for last week. But as I saw that price went straight, I couldn't enter again. Because when I don't pick it up from the peak, I'm always discouraged. If you remember, we got a good entry at 2,472, somewhere around here. 2,472. This way our sell was at 2,472. We had a perfect sell entry that would have given us so many pips for the week. But because I listened, that's why I always say, even if I'm the one that called the trade and it doesn't, someone said, yes, they remember. Good. Even if I call the trade and it doesn't suit your trading analysis, don't listen to me. Follow your trading plan. So that's why I was really pissed off on myself that you should have passed this level not to listen to people. And the trade went as down. Let me show you. This is my account that I normally use. I don't use it anymore. Okay, this is the trade. This is the let me show templates. Okay, good. So you see where I call the trade around here, somewhere around here. 72, exactly somewhere around here, 72. So I was expecting price to come down. We had a first sell, then we had a buy. And I also called the sell at 32. No, sorry, we had a buy from here up to this place. I was expecting to get to 32, but I didn't get to 32. So we called a sell, but I decided to turn all the way. Well, we enjoyed the sell. Then I stopped halfway. I said, oh, cool, maybe we're going to buy again before we come down. And that was what happened. Price now did what? Took us out. So I shouldn't have listened because this measured move says price is supposed to, since price broke, I'm going to show you all this. Since price broke this low, it's coming back to this pivot level. I'm sure this thing is saying it's looking like super story, but by the time I start explaining it, somebody asked, how did you get to 2358 as your entry point? This is how exactly. Look at my level here. Price just came there, weak us out, and it's going back up. But let's do it on the fresh. My screen is not showing. Sorry. Is anyone seeing my screen? It's static. Oh my God, I was showing. Okay, sorry about that. Okay, I did it in a way that I was going to show just only the screen. Okay, sorry. How am I going to do it? All right, don't worry. I'll use this chart. It's showing the stock. Okay, I'm going to use this chart now. Sorry about that. So now let me show you what the measured move is all about. Now, looking at this is a day one. This is a daily. It's showing now. Yeah. Sorry about that. I was explaining all by myself. I didn't know that it wasn't moving. So now this is daily time frame. I know what it means when it says daily time frame. It takes 1 day for a whole candle to form. So all these candles you are seeing here, it takes 24 hours for one candle to form. So for you, how will you know that it's time for price to buy or it's time for price to sell? Like I told you, there are two things that the market respects, which is support and the resistance zone. Now, what happened is the supply and the demand. You buy at its supply and you sell, sorry, you buy at a demand and you sell at the supply zone. But now the question is, which zone is stronger than which zone? Which support zone, support and resistance zone is stronger that price can respect or price will break through? That's where the knowledge comes in. So what I do is I have my measured move. My measured move is I take my trend line. Measured move has to be like this. Let me draw it first. Let me look my pencil and I draw. 1 minute. I need to uh, 1 minute. Let me use this brush. So what does measured move is? You look for an impulse that's already impulse move that already happened, correction move, then you cannot measure. But what you must measure is you must wait for an impulse move first, a correction, then you can now measure how the market is going to go. So it's either going to be like this, an impulse move on a downward trend, a correction coming down, then you now know, oh, is price going to do what? Either continue coming down or continue going up. But firstly, you must see that there's an impulse move. Now look at, this is an impulse move. This is a little correction. So I didn't use that. This is an impulse move. This is a correction. Now, this correction is very valid. You can see that price actually did a proper correction. Here was just like a pullback. It didn't do much, so you cannot use that to measure. But this was a proper action that price did what? Oh yes, price actually did a proper correction. So I can use this to measure I can use this to measure what I want to measure. Remember what I said? This is a bullish impulse move up to this place, and price did what? Corrected here. So what I'm going to do, how am I going to measure this thing that is going to make me confident to enter a buy and a sell within my supply and demand zone? So now let's get to work. Now I've identified a correction move and an impulse move and a correction move. So what I do, number one, is take my trend line and draw from the last low of my correction move up to the high. Can you see what I'm doing? Are you following my cursor? Let me change this to cross. Please, if you are following, can you type 1? If you're following on the tab box, can you type 1, please? All right, good. My screen is showing, but someone saying it's okay, 1. Okay, I was looking at the bad one. Okay, good. So now I've identified an impulse move. Now I'm going to identify a correction move, which is from here down to this. So when price has done this, you can do this on higher time frame, but the one I use it for is on the daily time frame, because this will help me enter the markets, in and out of the market, and using the weekly. On the weekly takes a long time. So I've identified my impulse move and a correction move. Now, for me to know where price is going to go, I keep saying, if you have been following me on my Telegram, I said gold is going to get to $3,000. If you saw when I wrote one time, 2,500 series of gold is going to start very soon. But price keep coming down to test 2,300 and go back to 2,400 and all that. But do you know what that 2,500? Price is going to 2,500 until this zone is broken. You see this one here? Let me take my pencil back. Did you see this place? Until here is broken, gold is not coming down like this. Until this level is broken, then I see a proper sell down to this place. Down to this place. I will see a proper sell here. That is, price has to break this low. But you can see what price is expecting it bounce off, Somebody in the chat, was it last week? Yeah, or 2 days ago, was saying that they see a move, a bearish change of structure and a bearish move soon. I said, no, for me, I keep seeing a buy because gold has broken so many highs. This is a new high now. This one here is a new high for gold. It has broken it. So until this low is broken, well, when I mean broke, it breaks, retest, then I know it's coming down. But until then, my bias is still buy for gold. But let me clean this. Let me wipe this off and wipe the 9 drawing and draw this back again. So I pick my cursor and I draw my from here to here. That's my impulse move. And I pick my trend line and I draw for my correction move down to this place. Now I've identified my impulse and my correction move. Now, how am I going to do my measured move? I will duplicate this impulse move here. Meaning I'm going to clone it, and move this cloned one up to this place. You know, while I'm doing, after I do this thing, you can as well practice it and see how it works. You see what I've done? I did not just draw another trend line. I measured the move. This impulse move here, I cloned it and I placed it at the bottom of the correction move. So for me, gold is going to come back to this place. It has gotten halfway. You can see it here. That's why when I called entry and I give us those TP that gold has not even got into, people will be surprised. How come you know gold is going to get there? Because it's just this measured move. Then I take my trend line again. You can choose to do that just to make it look good, like a diamond, and draw up to this point. Then what I'm targeting now is my pivot level. That's my pivot level, my TP1 and my next TP. Now, this usually supposed to be my, this low here is supposed to be where I'm going to say, okay, if gold breaks here, I'm done. But I don't use that because it's very far. Now, with this strategy, you must wait for, now this is my pivot level. You see the intersection between this impulse move and this cross that I did here. Let me delete this. Wait, hold on. Let me delete this so you can understand what I mean. You see the intersection between this crossing here and this crossing here. You see the intersection here? That is your pivot level. That is where you're going to either wait for gold to break and close above. They will determine, okay, this strategy is now valid for you to enter. If you understand what I mean, type 555 on the chat box, please. If you understand what I just said, by drawing a horizontal line on the pivot level, we're going to wait and see, okay, gold is going to break this. Because I can use this strategy, I won't even have to do anything on my trend on my chart again. I'll just wait to see the price action. Good. Thank you, Jeremiah. Thank you, Jagun, Pastor Jago. I see you. Thank you, Lena. Thank you. So now if you can see my chart, there's no indicator on my chart. There's nothing. It's just simple measurements. And you can see yesterday that price did what? Why I called the retest at 2358. That price came down, closed at 2353, reacted there, and is going back up. There's no your chart to be very clean, your chart to be very nice. Now, I'll pick another horizontal line and place at the tip here. You see I placed it there? I placed it at the tip there. If you remember the last buy I called somewhere around 2355. Remember it was 2355. I called the buy and our last TP was 32. But it didn't get to 32. It just stopped at 31 something and it took us back down. this was what happened. We called it as 2355. And you imagine, how do you think price was going to get to 2432? Because I've seen the move and I know that that's what's going to happen. And price did it. So this is another TP. You see where this place is? 2555. You know, brokers varies. Your broker's price might be different from my broker's price. So it's not necessarily, it must be the same thing. This broker I'm using is forex.com. Yeah, this forex.com. So your broker might, you understand that the price range might be very little, but it depends. Now I've drawn my charts and I'm done. I'll pick this the last, all these places are just my levels where I know that price will always react when you get there. Definitely to react, this place. So if price breaks here, it's coming down back towards 2148. If price breaks 2148, you can see, okay, look at, without even measuring it, look, can you look left? Let me show you something. See what price, you see where I placed this horizontal line? You see how price reacted here? Can you see it here? What I'm circling? Look left. You see this wick, it just came there, wicked it out. Even though I didn't even draw from the back, I just drew from this level up to this level and price reacted exactly there. So to show you that price, what price just does is based on support, resistance. If you can get those levels, you are free to go. Just trade yourself and don't bother yourself. Now, I've done it on my daily time frame. The strategy says, you remember, let's assume all here did not happen. Let me see. Let me put it this way. Market has opened. Okay, good. Let me put it this way. Now let's assume all this has not happened, okay? This is only what happened here. And I'm saying, what am I going to do? You have to wait, sit on your hands. There's nothing you have to do. The strategy says this pivot level, price has to close, daily candle has to close above it. If you close above it, then you can say, oh, it's not ready for me to buy. When you close above it, you take your buy straight up to this as your TP1, which is 24. TP1 should be 2431, but you cannot just use that as a TP1. You can break it intervals. Okay. So now let's play it. Oh, sorry, not this. Oh. Sorry, let's do that again. Let's say it comes here. It comes here. We're still somewhere here. We'll sit on our hands and we'll now wait. What is going to happen? We're doing nothing here. You're not entering anything. You're waiting because this strategy says as soon as price closes above this pivot level, because if price closes below it, it's still going to come down. It's not ready yet. But when it closes, any price that closes above it, because you've identified the impulse move, you've identified the correction. So if it closes above it, all you need to do is look for an entry to the next level here, to the next level here. That's all. So now let's play it. No. Someone show me my play. I'm trying to play this now. Okay. How do I wait? There's a way you click on play and you just start reacting on it. Give me a second. Let me figure this out. Yeah, I'm looking for the button on the screen. Oh. Oh, I've seen it. Sorry. Yeah, thank you. Thank you, Ahmed. Thank you. So now, I need to close this and so I can replay it. I need to close this. Yes, exit. I need to close this. Thank you, Ahmed. Thank you. I appreciate. I just saw it now. I was looking for it. So now let's do it again. So let's say I come here. So imagine this part has not happened. All this has not happened. And I'm sitting on my hands, waiting for price to start making a move. And what am I going to do? Boom. Market opens. I'm still waiting. Market open. I'm still waiting. Boom. It crosses. Have you seen the cross? Here, this one closes below it, above it. That's an indication that, oh yeah, this guy is ready to do what buy. So usually I always wait for a retest. Because when market breaks a zone, what happens? When they teach you, you wait for a retest and see what happens, okay? A retest, market retests, and you do what? You go in. Let's wait and see what happens. Play it again. This is a retest, and this one market close above, and it keeps buying. You see the way it wicks out? Let me pause it. Now you see what happened here? As soon as this broke out, good. Market gave us an indication that, oh yeah, I'm going to buy. For me, what I usually do, as soon as it breaks up, I'll wait for a retest back on my zone, which is 2353. 2353, which is this level, the pivot level. Let me pick my cross. Here, our market came down to 37. That will hit us on our stop loss. Because we're like, okay, we close, I wait, it will hit us on our stop loss. No good. There's no strategy that is 100%. But as soon as this one closes above again, is an indication that, okay, yes, this was just a fake out. So now the real move has started. Then we enter a buy, and price does what? Goes up straight to about 100 pips first, 200 pips, and our last TP. You see the way it wicked out? It wicked out and closed here. So when we got in, when I called in for that sell at 2432 or so, I called in for a sell at 2432, but I did not wait for it to get back all the way back to the pivot level. I saw that someone I respect so much was like, oh, he's seen a buy soon. And I decided to change my mind. If not, I would have just made a whole lot of money. But let's keep going. Let's forget about the past and flip the future. So play. Price did well, got our stuff, came back up. Okay, this was in the past before. This is another one. No, sorry, this has happened before. Not that. These are recent. I'm looking at the recent ones now. You see how price did? Anytime it closes below, it respects it, come back down. So now look at it. This bearish candle, this is a daily candle. So even if price breaks this, close above, you decide to sell, you wait for a stop for a retest back to 2353, and you do your 100 pips, 200 pips. Price got all the way down to 2321. So you must have gotten your first 200 pips, 100 pips, move your stop loss to entry. It goes down to 200 pips before it goes back up to hit us back on our entry. And it did the same thing, and just like that I don't add any other thing to this my chart. I just use only these levels. That's what I use to do what? To go to my trade. Now let's continue. Let's play it and see how it goes. And boom, it creates it. Came back to retest it here. Back. This was when I called at 2355. Went back up. Another. We took a sell from somewhere around here. Price came back. Now, this is where price is at the moment. Now, someone asked on the Telegram channel, why did I know? How come was I sure that price was going to reverse from 2358? I wasn't sure. I just went to this lower time frame on, 4 hours. And I looked at what's going to happen here on 4 hours. I went straight to my line chart. Line chart is very powerful. It shows you what price. Sorry. Line chart is very powerful. It shows you what price is going to do that you're not going to see. It takes off all the noise. All the wicks and all that. It takes it off. So I went to my line chart and I look at You know, let me go back to see where price was. I think it was around here when market opened. Now let me go to 1 hour. I need to show you on 1 hour, but there was a gap. Don't know if the gap is going to show on this one. This is another broker. Okay, didn't show. There was a gap somewhere around here in other brokers. So for you, you might just think that, oh, price is going to close the gap and go. But what I did, I went to 4 hours, went to my line charts, and I was like, where are those zones that price? And I had to zoom it out and see where are those places that price or tendency come on. Price was somewhere here when the market opened. It was still showing that it's going to come down. But how long is it going to come down? I already have my level 2353, which was my base. That if price breaks above it, I know that, okay, yes, then my buy, I have to wait to see if it's going to come down to 2276. But since price was within there, my bias was still buy. And I decided to come to my line chart to measure it. I was like, okay, these are all these places. You see all this move all here. They're all important places. And these are the last impulse move on the 4 hours. So what I did was just measure okay, here is 61. The last impulse move here was 61. I was like, okay, within 61, I'm back down to this place, 57. Price is going to come back to retest there. You see what I'm showing you here? Let me pick my pencil. You know what I said? Between this place, this impulse down here, and this one here, price is going to do what? Let me draw it perfectly. I think you can see it. Price is going to come back to retest it before it goes up. So that was why in between 61 and 57, I had to put it in between. I put it at 58, and price just went back to, I think, 55 before it started going up. Alternatively, you can use your rectangle. Rectangle is also a powerful tool you can use to get perfect entry and perfect exit. If you can still remember rectangle, if you are here, you can still remember my rectangle strategy. Can you type? It's not mine. Before someone, what's the name of that guy that come to like tell people to? It's Papa Smurf, but I use that. I've moved it all to 15 minutes. Rectangle strategy. Papa Smurf touch, but you know, I had to track it in a way that it takes everybody can be on the chart with 15 minutes. Now this 4 hours. So I go to, oh yeah, QOPFX, yeah, the one you use 15 minutes. So what I do is, for the rectangle strategy tells you look for an impulse move, you draw a rectangle from there. So what I did, alternatively, for me to confirm that price was going to bounce back from that area and it's not going lower, I had to draw a rectangle. I took a rectangle from here, I drew it all the way to this place. I'm going to use a different color so it doesn't mess up the screen, okay? I pick my horizontal line. I put my horizontal line at the base, remember it. Just for those who, let me change the color. Let me change the color to yellow, good. And I pick another horizontal line, I put it up above here. And I take my trend line all the way to this. Don't mind me, I just like perfection, that's why you see me. I take another trend line all the way to this. For those asking for the recording, I'm going to post it on the YouTube channels, on my YouTube channel. If you're not following me, you can just follow me. So I'll post it there and we'll take it up from there. You can watch this. And you can see where price is presently is actually on the middle of my rectangle. That's why price closed there at the middle. Straight up, you can see what happened there. It came on my this measured move on daily and see what price did. It went up. So I did all that to confirm that my buy bias is perfect, that I'm still on a buy bias for gold. Until I see change of structure, my bias for gold is still buy. So what I did, I'm not sure there's a new person here, but if there's a new person, I might do this later. Maybe on next class, I'll show you what the rectangle is. So like I said, if you see where the price is, here and here. I'm not going to draw the up one because price is not there yet. Let's just work with what we have. Okay, so I moved it now. Now, this is what happened. When I drew my rectangle, this is another broker. For the other broker I used, it shows that price was going to get to 58, between 58 point something. Actually, I just have to put a random number. So that was why my pullback then was 58. I was expecting price to do what? Come back and retest it, because price was somewhere around here. I was expecting it to come back to retest it here before going up. So that was exactly what price did. Price came back, retested 58, pick us up. I think we had only 20 pips drawdown, because price got to 56 or 55, either 20 or 30 pips before it went up to our first TP, which was 2,368, the second TP, which was 2,378, and the third TP, which was 2,388. So currently price just did a stop here because there's a pivot level here on rectangle. You can see it clearly. There's no indicator on this chart. All it's just respecting is levels, the support and resistance levels. That's only what price is doing. So what I'm expecting to happen now for gold is when market open, I'm expecting a reaction to come down. So I'm expecting price to do this. What's my pencil? That's my pencil. Let me get my pencil. So I'm expecting as soon as market open, price will do what? Either do this bounce up from here, come back to our entry and go back, or break it all the way down back to 45, go up. If it breaks it, if it works this way, it's coming down. But as soon as it maintains this place level here, price might decide to come back and retest here and do what? Go up. But following the measured move of the market, which is within the daily one, remember we did a measured move. Market is going to go up all the way to what? 2, 5, oh, sorry. I need to cancel that. Market is going all the way up to 2.5, what? 2.558. That's where market is going to get to. When it's going to get there, I don't know. But is it going to get there? Definitely price is going to get there. It will get there. So, but for now, we're going to wait for a pullback. But if the market doesn't pull back, if you decide to break above and close it above here, I'll wait for 2 H4 candle to close, because here is a very strong resistance zone. You can see how market reacted here. Let me show you with a pencil. Market reacted here, came back down, broke it, came back here, retested it, went all the way up, came back here, retested it, came here, broke it. You see where it broke it? Came all the way down here, came back here to retest it. So this is a strong resistance zone you shouldn't joke with. The only time I can see that, okay, I'm good to buy, I have to wait for this and this to happen. Then I can now buy all the way up to, there's a lot of money to be made here. If it breaks this, then I'll make it all the way up to what? Back to this. But what I'm waiting to see now is market to what? I'll buy it with all my heart. If market reacts, come down back to our entry and is rejected here, then I will buy it all the way up, which is a very good price for us to buy. So for now, we're not doing anything until we see the reaction of the market, what the market is doing. I'm not taking any trade. Any trade I'm going to take, I'll post it on the platform. If I'm going to take a sell, short sell, I'll post it in the platform. But for now, we're not doing taking any trade for now. We just have to wait, let the market come to us. Okay? So these are the two scenarios. Number one scenario is this one. Price comes back here. This market holds it and it goes up. Two things that can give us indication. If the market gaps, okay, let me go to my own broker. Let me see. Vintage, that's my broker. All right, okay, this was what I drew last week. Price has gotten just almost halfway before our next TP. So I'll wait for market to gap. You can see the gap that happened here. This was last week gap that happened here. So anybody that sees this will like, oh, let's buy. Immediately market open. But see what happened? Market came down here and went back up here. It came back, it didn't break this. So looking at this thing, it tells you, oh, impulse move, correction, impulse move, correction, impulse move. That is what you're seeing. And exactly it can happen that way because it's giving us what? Higher lows, or lower high, sorry. This is low, high, this is low, high. This one didn't break this. So normal person, anybody will think price is going to react and come back down here. Back to this zone, maybe create this one and come back down. That the change of structure has happened. But for me, I'm not going to see it that way. I have to wait to see what price action does and see, okay, am I going to buy this or am I going to sell this? So for now, I'm sitting on my hands. I've closed on my trade for last week. I'm waiting to see what's going to happen. So today, if the market gaps up or down, it will tell us what to come. And let me give you a cheat that someone, my mentor, one of the people that I respect very well in the market says. 10 o'clock Nigerian time. Write this down. 10 o'clock Nigerian time. If the candle closes red, which is bearish, throughout that day, the market is going to be bearish. If the market closes green, which is bullish, throughout that day, the market is going to be bullish. Now, that is on a daily thing. These are for scalpers. If you want to scalp, this is just a cheat for you. I backtested it and it's working. For those who joined the $100 challenge, that's what we've been using. But I had to stop that because of the time difference. It's messed up with my sleep. I need to wake up by 3:30 a.m. in the morning to look to 3:30 a.m. in the morning is about 9:30 a.m. 9:30 a.m. in Nigerian time. Then wait for the candle. Then I go back to sleep. It was just messing up with my sleep, so I had to stop it. And I said, okay, let's just focus on the main group and call trades from there since we have a longer trade. Not gold, any pair, not just gold, any pair. If it closes red, that's what our mentor said, and I walked and I looked at it. So that day, if I want to pick up my trade to see where the market is going to happen, now let's go to 1 hour. Let's backtest it and see on this place. Let me hide this chart. Let me hide this chart and backtest it. This is going to be the last one for today. No, these are session breaks now. Okay. Now, this is, you can look at your chart while you're doing it. I think it's 8 o'clock. It should be here. Oh, this. Yes, it should be this one. Because my time is different. My time is different from, if the market opens now, okay, let me see here. This is 8, 10 o'clock Nigerian time, 9, 8, 7, 6, 5, 4, 3, 2, 1, 12, 11, 10. Okay, good. So this is 10. This candle is 10 o'clock Nigerian time, which is 8 o'clock my time. You can see that the candle closed. Let me put a horizontal line on it. This one. If I put a horizontal line, it's going to show, everything's going to show. Let me just leave it. You see this candle closed what? Green. What happened to the rest of the day? Everything went green. It went up, bullish. Now let's look for 8 o'clock. 8 o'clock. This is 8 o'clock candle. All right, this one was like this broker shows you indecision candle green. But if you check other brokers, it will show you red. But this one, you can see how tiny it is. It showed you green. But if other brokers will show you red, you see that it sold all the way. But this one showed you green. It even keeps showed. It showed you green because it has happened to us twice. That it showed that it was opposite. Okay, look at now. This is, let's say this one showed green and it sold. But some brokers will show red because the other broker I used, it was red and it sold. Let's go for another 8 o'clock candle. 8 o'clock candle. Green and it sold all the way up. Show another candle. I've not tried it on another pair. This is 8 o'clock, green, and it sold as well. It came down and it did what? It keeps selling as well. Let's check another one. 8 o'clock, red, and it did what? Red candle, and it did what? It sold all the way down. Let's check another day. 8 o'clock, where are you? Okay, this one showed green. This one showed green, and it sold. Let's look for another broker. Owanda, let's try Owanda. So Owanda 8 o'clock. You know, Owanda time might even be different from our time. Let me do it. Let me calculate it. Like now should be how many o'clock? You can see that it different. Brokers differs with time frame. Now market has opened in some broker, but market has not opened on Owanda. You can see that this place market has not opened. But this is 10:26. Can you check your chart and see if market has opened on your chart? Check your chart and see if your market has opened. If market has opened on your side, let me know. Because my broker market has not opened yet. Maybe it's by 11 o'clock. I don't know. So I think it's by 11 o'clock. But this is has market opened on anybody's chart? Because it's supposed to be 10. But this is 10:27. Not yet. Okay. All right, good. Oh, not yet. Good. So maybe then if it's that, it has to be, if then my calculation here was actually wrong because so gold not yet. Check other broker, not gold. Check other pair like GBP USD and all that. Check if price has opened another pair, not gold. The market hasn't opened here. Let me check here to see GBP USD. Oh, okay. You see this one, market has opened here for GBP USD. You can see the timer is on already. Market has opened. Yes, for other pair that's open, but for gold it hasn't. So okay, let's use this one now. So this is 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 12, 11, 10. If I'm calculating it well, 9 o'clock. Okay, here is 9 o'clock. Bullish. Market came down and went up. 9 o'clock. So this should be 9 o'clock, right? 9 o'clock is bearish here. Market came all the way down. This is GBP USD now. So this is, let's look for 9 o'clock candle. Bullish green. Market went all the way up. Are you seeing what I'm saying? Are you seeing what I'm showing you? Check on your chart. Backtest it on your chart. This is 9 o'clock candle, which is 10 o'clock Nigerian time. The market closed as a red candle and it went down all the way red. Let's look for another 10 o'clock candle. 9 o'clock. So try it with yours and see. So for those, it's just for scalping. 1 hour, sorry, 1 hour time. Use it for 1 hour. Go on H1. You can check that on H1. So you wait for the 10 o'clock Nigerian time for market to close. If the candle closes green, for scalpers, you can do it. Just take little pips out, 5-10 pips. Use your big loss size. But remember, I always teach you, a scalping account should be different from your main account, because scalping, there's no risk management there. You just garbage in, garbage out. So with this, you can just use it, scalp a little bit and out, scalp a little bit and out. But this one, 10 o'clock, for me, it's not for me to tell me the scalping. It's for it to tell me what the direction of the market is going to be for that day. So when I see that gold is telling me to buy, to sell, just like this now, if gold tells me, let's say this is the candle for the day, I think it was, this one, which is telling me green, is a confirmation for me that throughout that day, it's going to buy. So I would look for more of buy entries than more of sell entries. That's what it tells me to do. It's just giving me more confirmation. So when I put in all my analysis there, I'll know that yes, whatever I'm doing is valid for me to sell or for me to buy. I don't know if you understand what I mean. So it's not that I'm using it to scalp. I'm using it to tell me this is what I want to do. I'm going to buy or I'm going to sell. So for gold, market has not opened, so there's nothing yet for us to do. I'm going to call this chart. I was thinking the market is going to open shortly, but it didn't. So if there's any question, you can type your question and let's answer the question, and we'll wait to see what the market has for us, if we're going to buy or if we're going to sell. Any question, can you type it on the chat box, please? Yeah, somebody asked what time frame is perfect for the market entry. I normally use, like I showed you on this, what I use is 1 hour, 15 minutes. 1 hour, 15 minutes. If I'm using my rectangle, after I've drawn my rectangle, now every strategy has different entries. Every strategy has different entries. Like for this one, for this this measured move that tells me that the market is going to go all the way up to 255, I will wait for the daily candle to close above my pivot level, which is did. Then my entry will be on my H1 and my 15 minutes. H1 and 15 minutes. On my rectangle as well, which is this one I drew for you. Rectangle, you draw it on 4 hours. I need to take off this season break, sorry. Like now, price has closed here. When price closed on my first pivot level, all I need to do is wait for the next one to close, which is this one, and I buy. That's what I do. But now I have to wait for market to open. Market has not opened to tell me, is it going to go or gap up? Is it going to gap down? Whatever thing it's going to do, will enter. But the best way to enter the market is 1 hour, 15 minutes. If 1 hour if 1 hour give you confirmation, go to 15 minutes to get more confirmation. Then if 15 minutes tells you to buy, just buy. Go ahead and buy. But the overall thing is to check where the overall trend is going to. Is it a buy or is it a sell? The reason for this is that the person that asked me, why did I take my entry at 2358? This was the reason why I took it. I drew my rectangle and waited for price to see if price was going to come and test my rectangle, which it did. It came all the way down and it tested it. And I said, okay, I think it's time for it to buy, which is, yeah, sorry. That's a pivot level for the rectangle, somewhere around here. It's almost on the same level with this, somewhere around here. So I just measured that price was going to come in between 2361 and 2359. And I took the middle, which was 2358. And price came there, retested it, went down a bit, and went up. Please, someone should kindly share the video with me later. I need to get back to work. Okay. Any other time frame, please? Sorry, any other question? If there's no question. Oh, sorry, Jago's there. If there's no question, I think we need to. How should I end the record? 1 minute, please.